Hello traders, this is Forensic Forex with Deontay, where we analyze the details and specifics of the foreign exchange market. In this video, I will talk about the ideology surrounding the opening price. Markets do not go up or down randomly. It is all systematic and strategic. However, traders do not think methodical and take a lackadaisical approach to trading. There is a very consistent fundamental ideology every day, every week, every month, and every year, and even every session. Let me expose you to real Forex knowledge. Stay tuned. Leave the indicators alone. This will be a three-step process, starting with core curriculum, chart activity, and lesson plan. Let's jump right into our core curriculum. OHLC, the open, high, low, and close, is the most important concept every trader needs to understand. The life cycle of that candle is important. It tells you a storyline on what occurred during its time to expiration. It all starts at the open. The opening price is fair value to the marketplace. The intended trend will decide how the candle forms. If price wants to move higher, it most likely moves lower first. If price wants to move lower, it most likely moves higher first. Above and below the open. If the opening price is fair value to the marketplace, that would mean anything above is a premium and anything below is a discount. This is how I'm able to find my overbought and oversold conditions without any indicators. The seller. Now to explain the ideology around the opening price, we'll go through a question. You have come to a conclusion you want to go short. Where would you sell? Above the opening price or below the opening price? Now think about this critically. If you're a seller, you want to sell your goods or services at a higher price to make a profit. Now, with that being said, where would you sell? Would you sell below or above? I think the answer would be above. You want to sell in a premium. Why would I want to sell my goods and services below the opening price at a cheaper rate? On the opposite end, you have the buyer. To explain this ideology surrounding opening price, we will use this question. You have come to a conclusion you want to go long. Where would you buy? Above the opening price or below the opening price? Think of this. If you are going to be a new home buyer or you wanted to get into real estate, would you buy a home for the first price thrown out at you, or would you try to negotiate a price below that? I would assume everybody would like to buy the house at a cheaper rate. In return, buying it below the asking price can benefit you because the house can increase in value and bring you more equity in the future. With that being said, would you buy above or below? Now I know we're all thinking it. We will buy below the opening price. Why would I want to buy in a premium? For the chart activity, we're first going to mark out the opening price for the daily candle, monthly candle, yearly candle, and session opening price. We're going to take a look at many different examples and different time frames as well. Step 2, we're going to study what occurs around the opening price. Step 3, we're going to think critically about what you observed in the price action. Let's take a look together. Looking at UJ, US dollar versus the Japanese yen. Let's say today is March 21st, Tuesday, 2023, and you did your homework and your research, and you told yourself that tomorrow should be going short. What should you be looking for? Well, we know we have to look for the opening price because that's fair value. And if we're going to be a seller, that means we should be looking to probably sell above the opening price. Let's see what happens tomorrow. Going into the next day, we can see we get a down close candle. Like I said earlier in the video, it all starts with the opening price. The fact that we knew that we wanted to sell tomorrow, we knew exactly where we should be looking for a sell opportunity, which is going to be above the opening price. Anything above the opening price is going to be a premium. We can see price opens, runs up, makes a high, and creates range expansion through the open, down, creates a low, comes off the low, and then closes here. Overall, we would be looking for the sell opportunity above the opening price. There are going to be moments in time where the opening price is the high of the day. You can see here, this candle opens, does not move up into a premium. It just sells right off from fair value. Same thing here, and the same thing here. But ideally, if you're going to go short on any day, you want to go short above the opening price. You can see here, it opens, runs up, creates a high, runs through it, makes the low, and closes up here. Same thing here occurs. Opens, runs up into the premium, high probability sell scenario if you're looking to be a seller on this day. Then it runs down, makes a low, comes off, close. Same thing happens here. Let's take a look of a weekly candle and see how this plays out as well. So we're still looking at UJ, and we're looking at the week of January 2nd or January 1st, essentially, the New Year's. And let's say next week we want it to be a seller. What would we have to wait for? We would wait for a price to open and then give a move above the opening price and then sell anywhere above the opening price. Let's see how that plays out. This weekly candle is down, but more importantly, it's how this candle forms. Its full life cycle. We can see it opens, makes a run above the open, sells through, with the range expansion down, makes a low, then close. So that means at one point of time, from Sunday to Friday, it moved above Sunday's opening price or the weekly opening price and found a selling opportunity above that opening price. We can actually go on the lower time frame and look at the weekly range and each day individually to see where the market headed. Looking at the weekly candle broken down on the lower time frame, Sunday to Friday on the 1 hour chart, we can see the ideology much more clear surrounding the opening price. If you were heading into this weekly candle wanting to go short and you knew that it most likely was going to close down, your probable area of finding a setup was above the weekly open. Now, why above the weekly open? Like we said earlier in the video, if you're looking to sell something, you want to sell it above fair value so that you can make the profit. You can see here, price comes above the weekly open. It is now overbought. Doesn't take any indicators to tell you where overbought and oversold is. The weekly open will tell you that level. That is the line in the sand. And when price gets above it and you already have your bias, then you move accordingly. You would go short above the weekly open because you expected this week to go down. As you can see, Wednesday makes the high of the week. And then you have the weekly range expansion all the way down to Friday, making a low, and then Friday closing higher off from its low. But you can see how influential this weekly opening price is. Let's take a look at the monthly chart. Looking at the current month for UJ, March 2023, we can see overall it is a down close candle. At one point it opened here, it made a high up here, gave the monthly range expansion down, created a low, and this is where it's currently trading at. We're currently in the last week of March, but we can see overall a lot of progress has been made with the candle's life cycle. Overall, if you came to the conclusion that you were going to go short for this month of March, we knew the shorting opportunity is most ideal above this opening price. Let's take a look of this opening price on the lower time frame. Looking at the price action here of the monthly chart broken down on the daily time frame, we can see this is the opening price for March. This is March 1st, 2023. And we can see the opening price is here. So that's the line in the sand that gives us our overbought and oversold conditions. Now we can see price moves above the opening price at one point and makes the high for the month here. Ever since then, it gives us a monthly range expansion and runs lower. The ideal sell scenario is always going to come by way above the opening price. You can see it happens on the daily, weekly, monthly, and now you're also going to see it happen on the yearly chart. Let's take a look. Let's say we're coming down to the end of the year of 2006, and it's like December, November, and we're speculating whether or not next year is going to be up or down. Let's say we had looking at this yearly chart, we're looking at the example around 2006 going into 07. Looking at this example, we're looking at the year 06 going into 07. Let's say you speculated, you did your homework, your technical analysis, and your fundamental analysis, and you came to the conclusion that next year is going to be a down close candle, or it's most likely going to trend down. We already know where overbought and oversold conditions reside at the opening price. Now this happens on all time frames. As you can see, when we look at the next yearly candle, you'll notice that it moves above the opening price and gives a range expansion towards the intended trend. Let's take a look. We can see it opens here, and it's running above the open, going into what? Overbought or into a premium range for the yearly candle. At some point of time, it's going to make a high point and then give us a yearly range expansion away from the opening price. You're going to see it teeter back and forth. So whether that be some months it's above the open, some months it's below the open, but at one point of time, it gets above the opening price and makes a max point. And after making that max point, it's going to then rally lower because it's sold at the highest price possible. And we'll just watch it play out. Actually, we're not going to speed up. We'll just let it play because there's no rush. Because I want you guys to see the formation of a candle. The open, high, low, and close is really crucial. It doesn't matter if you're a new trader or a veteran trader or a seasoned trader. This concept is always going to sharpen your skills and keep you on the right side. That doesn't mean your daily draw is always going to be right, but at least you have a perspective of which side you're going to take a stance on to find your ideal setup for the analysis that you want to play out. And as you can see, that's that yearly candle. It trades down, running up into a premium and then running lower throughout the rest of the year, making a low, closing above that low as well. So you can see it's fractals to it. It doesn't just happen on the daily chart. It doesn't just happen on the weekly chart. It doesn't just happen on the monthly chart. It doesn't just happen on the yearly chart as well. Let's take a look at some of the sessions: London, Asian, and New York. For this example, we're looking at EU, which is Euro versus US dollar. And you can see that today, let's say, hypothetically, it's Tuesday the 21st, March 2023. And tomorrow you did your technical analysis and your fundamental analysis, and you came to the conclusion that tomorrow you want to be a buyer. So I'm showing you the opposite end of this. So I showed you the seller perspective. Now I want to show you the buyer's perspective so it comes whole for you guys. Wednesday, you're looking to be a buyer. So instantly it's inverse to what a seller would do. A seller would wait for price to move above the opening price and then sell. A buyer, however, will wait for price to come below the opening price and then buy. Let's take a look to see what happens the next trading day. We could see price opens, drops down, and then runs higher. So there was a buying opportunity below the open. Let's take a look on the lower time frame intraday and see what happened during the sessions, because the same ideology can be applied. So looking at Wednesday's trading range, we can see overall it was bullish, but we can see there is some type of drop down below the opening price, then a rally higher. So let's say we're looking at midnight. We're using midnight opening price for the analogy. And this is going to act as our new day opening. Anything above is a premium. Anything below is a discount. So price comes below midnight opening price, or the opening price to the new Wednesday candle. And then price, you can see, rallies up. However, if we were to look at the London session, for instance, we'll drop down to something lower. Let's say the 5-minute. The opening price that I use for the London session is 2 a.m. Now, I know some people say they use 1 a.m. You can use either or. 2 a.m. is right here. It's 2 a.m. Now, if that's the opening price to the European session, the same ideology can be found. Anything above is a premium, anything below is a discount. Look at how it dropped below the opening price for the session. I know the colors may be throwing some people off, so I'm just going to clean it up for you guys. That's the London session in between these two bars here. It drops down below the opening price of European Open or London Open. And there goes the buying opportunity. So for the session, you can see the ideology follows suit and follows the same concept. Buying cheap, buying at a discount. Because I want to be a buyer, I need to buy below the opening price. The session itself has an opening price. Remember, it always starts with the open. And if you want to think as a session as an actual candle, that's the open, that's the low, that's the high, and that's the close. So this is a depiction of the London session or the European Open session as a bar. So it's no different from a candlestick. It's read the same way. You can see these are the bars, and this is the candlestick. At one point in time, it opens here. It drops below its open. Cheap buy, runs back through the open, makes a high, comes down, closes off from the high. So these ideas are fractal on time frames and the actual session. For the New York session, using EU, Monday 13th, March 2023. If you're a buyer this day or looking for some type of buy setup, where would you look for the buy during this session? Odds are it will be below the opening price. And let's take a look at what happens. You can see this is 7 a.m., the opening price for the New York session. Anything below is a discount, anything above is a premium. High probability buy scenarios will unfold below the opening price. It all starts with the open. You can see price comes below the open, makes a low, and then rallies through the open, making a high, and then closing off from its high there. So what would that look like? It would look like this. Price opens here, drops down, runs high, and then closes off. So this is just a depiction of what the New York session is doing in its life cycle from 7 to 10 a.m. 3, at this Asian session, if you were looking for a sell scenario, you can see how it played out here. So if we were to show you the annotations, this is 8 p.m., the opening price. Anything above premium, overbought. Anything discount, oversold. Higher odd sell scenario sponsorship, higher odd buy scenario sponsorship. Commercial speculators, or the algorithm, or the market makers, the people that actually control the price action, are waiting for price to get above 8 p.m. to unfold the intended direction. So the intended direction was primarily down because we could see how it trades through the opening price, giving its Asian range expansion from high to low for majority of this session. We do see earlier in the session it just thread back and forth, but we know typically studying ICT's material, and if you're a more seasoned trader, you know that Asian session characteristics tend to be consolidative in nature, especially with pairs that are crossed with the dollar. But overall, you can still see the ideology playing out. They're selling in a premium, and then they're buying in a discount. The main takeaways from this lesson are as follows. If bullish, buy below the open. If bearish, sell above the open. There should no longer be any excuses to why you can't find a high probability buy setup or a high probability sell setup. Yes, there are going to be moments in time where you get the draw wrong, but when you get the daily draw right and you're following this ideology, you'll see the speed and the dynamic sponsorship behind your trades. As an added bonus tip, wait for a double confluence to help aid setups. For example, if you are speculating that the next weekly candle is going to be bullish, wait for a price to be below Sunday's opening price and below one of the intraday daily opening prices as well. Or you can also add in the session opening price and wait for all three to align to find a high probability buy scenario. Let's take a look at one of those examples. The US dollar versus the Swiss franc, and we can see that price is below midnight opening price for the day of Tuesday, and we can see it's below 2 a.m. opening price, and it's also below Sunday's opening price. So there's a lot of confluences here. 3 confluences for a discounted buy. Price drops down below the London session's opening price, below intraday midnight opening price, and is well below Sunday's opening price for the high probability buy scenario. And as you can see, you get your classic AMD setup: accumulation, manipulation, distribution, and price runs higher. This brings me to the end of the video. I hope this video was valuable to you as a trader. If you enjoy this video, then I think you'll like these two as well. Please subscribe, like, or comment for more high quality Forex videos. As always, safe trading, leave the indicators alone, and peace.